from San Diego, California, this is the Frug Life Podcast, the show that teaches you how to save, invest, and earn money. Here's the host, Mr. Frugal himself, Ricky Hirsch.
Welcome to the Frug Life. Do you remember my episode, Everything is Set to 11? If you don't, it's basically about how the world is more competitive now. I gave a few examples in the episode about like the Olympics, for instance. I looked at a video of people competing in the Olympics in like the 40s or the 50s or something like that a long time ago. And while their feats of athleticism were impressive, it also looked like something that theoretically a pretty normal person could do if they spent their whole life training for it. Said another way, like the Olympics now are much more impressive and the feats are much more complex. And just the world seems to have gone that way in general, right? Let me give another example. I recently started playing chess, and right now the best chess player in the world is a guy named Mangus Carlson. Now this is like my opinion, and it's not very well researched and perhaps not very well thought out. But I would venture to say that Mangus Carlson is not just the best living chess player, but the greatest chess player who's ever lived. Better than Bobby Fischer or whoever other famous chess players there are. I don't know that many. And part of the reason, though, that Magnus is the best chess player, though, is because he was able to study the great chess players of olden times, right? Of prior times. He was able to study Bobby Fischer and watch Bobby Fischer become a better chess player, I guess. Now, I don't actually know if that's true if Mangus Carlson studied Bobby Fischer. I'd assume so, though. So if you somehow were able to bring Bobby Fischer alive and able to play chess, and you placed him against Mangus Carlson, I think Mangus Carlson would destroy him because Mangus Carlson has seen him play, right? He can review Bobby Fischer's work, and that's just kind of the nature of time, that the current best players have studied the best players of yore. And so I think, in some ways, this kind of applies to personal finance too. When I was younger, when I was in my 20s, I hadn't the slightest idea what an ETF was. No idea. And part of it is that ETFs were just newer at the time too. Likewise, at the time, I didn't understand what a passive fund was. I didn't understand what passive investing was. And I think that's because passive investing has like come to more prominence now. If we think about times in the past and we think about how the stock market started, and we think about VOC, the Dutch India Trading Company and their stock, that was really a stock just for a few people that were well connected in a sense, right? Like you had to know someone to buy the stock, I think. And it was a like brand new idea, the idea of having ownership in a company with other people. Just that all of it was new and probably strange to most people. Most people probably didn't understand stocks. And likewise, as time has progressed, there's been new vehicles for investment, like I was mentioning, ETFs, passive investing, mutual funds. As time goes on, I feel like people begin to understand these investments and these investment vehicles better. And I feel like people understand them a lot better now than they did when I was in my 20s, is my point. I think it's easier to learn about this kind of stuff now than it was at any time before. There's YouTube videos explaining all of this stuff. There's tons of podcasts explaining it. I think in times past, that knowledge, of course, existed, how ETFs worked, but maybe in a way that was less obtainable to an everyday person or less maybe visible to an everyday person, right? Like Graham Stephan, for instance, the subject of a recent episode, has like tons of followers, millions of followers, presumably a lot of them young people who are all learning about stocks and investing. And Graham Stephan obviously didn't produce content like that when I was in my 20s. So this knowledge is all much more obtainable now. I think it also has some interesting side effects. So let's talk about some of the negative aspects, though, potentially, of this rise of passive investing. So with the rise of more everyday people investing, I think it potentially has caused PE ratios to become higher and drives down lower long-term returns. Now, of course, this is all my opinion, and not a very well-researched opinion, just my musings. So why might PE ratios be higher now and long-term returns be lower? Well, I think as more people learn about passive investing and do it, more money goes into the stock market. That's not too surprising. Now, pair this though with a decline in publicly traded companies. And so that's something that's been going on for a while. There are less publicly traded companies, to my understanding, now than in times before. There's a lot of factors that go into it. Younger companies deciding to wait longer before becoming public, as well as, mergers and consolidations of large companies at the top. But there's more money chasing less stocks. And this in turn causes those stocks to become more expensive relative to their earnings, causing PE ratios to be higher. And in fact, this might come full circle at some point because there may be some kind of asset bubble related to passive investing. That's a little bit of speculation. But at some point, perhaps there may be a paradigm shift in investing. Perhaps there'll be even a return to actively managed funds again. It's been very much a trend moving away from actively managed funds and passive becoming more popular. As always, I invite your thoughts on this topic. If you want to reach out to me and share your thoughts, I may even feature some of them on the show. For now, though, it seems passive investing may become more popular in the future. The stock market may become more crowded with more participants, and Mangus Carlson will remain the best chess player in the world. Actually, I think I did hear some news that he didn't do very well in his last tournament or something like that. Anyways, thanks for watching today's episode. Have a great month, and as always, stay frugal.